Hello, everyone, and welcome to today's virtual non-deal roadshow. My name is Alifa Islam, virtual event moderator here at Renmark. On behalf of our team, we want to thank everyone in Toronto and surrounding areas for joining us for the presentation of Perpetua Resources Corp, trading on the Toronto Stock Exchange and the Nasdaq under the ticker symbol PPTA. Presenting today is Jessica Largent, CFO, and Chris Fogg, Investor Relations Manager. With that, I will hand it over to Chris.
Hello, and thank you for joining today. Our vision at Perpetua is to develop one of the lowest cost open pit gold mines in the United States, provide the country with a critical mineral important for national defense and the clean energy transition, and to restore an abandoned brownfield site. Please take a moment to review our cautionary language on slides 2 and 3. Why Perpetua Resources? Our investment thesis has never been stronger. We plan to redevelop one of the largest, lowest cost, and long life gold projects in the United States. Our project has great economics with a 15-year reserve life, a payback period of less than 3 years, and an internal rate of return greater than 20%. And we have a valuable byproduct in antimony, positioning the Stibnite Gold Project as an emerging national strategic asset. Our project is located in one of the best mining jurisdictions in the world, and we have strong community support. That strong support that we have in Idaho has been built over the last decade as our communities and politicians have seen our commitment to responsible mining and restoration at Stibnite. One of the many reasons we are so unique is because we will take an area abandoned after 100 years of mining activity, most of which was to support World War II and the Korean War, and we'll use a sustainable approach to restore the environment and develop a modern mining project with critical mineral production. So in the next few slides here, I will touch on some of the highlights from our 2020 feasibility study. With 4.8 million ounces of reserves, the Stibnite project is one of the largest gold reserves in the US, not owned by a major producer. And it is the 7th largest out of all US gold deposits. In total, we have 6 million ounces of measured and indicated resources and an additional 1.2 million ounces of inferred resources. And this slide does not include our significant antimony endowment, which has reserves of 148 million pounds and 206 million pounds in measured and indicated resources. When it comes to open pit gold mines, we have one of the highest average gold grades, with approximately 2.2 grams per ton in the first 4 years of production and 1.4 grams per ton over the 15-year mine life. The historical tailings alone have 1 gram per ton gold and will be reprocessed early on in our mine plan. Turning to production, our annual gold production will average approximately 300,000 ounces over the life of mine and more than 460,000 ounces per year in just the first 4 years, which would make it the largest producing mine in the US outside of the Nevada Gold Mines joint venture. Average daily mill throughput will be about 20,000 tons per day, or about 7.3 million tons per year. And the process plant is designed to process sulfide, transitional, and oxide material from the different deposits. In terms of costs, the Stibnite project will be powered by the lowest carbon emissions grid in the nation. Our ability to source low-cost Idaho hydropower, combined with a low strip ratio and an antimony byproduct credit of $70 per ounce, that puts us well within the lowest quartile of the global cost curve. Life of mine all-in sustaining costs will average less than $650 per ounce, and in just the first 4 years, will be less than $450 per ounce. Our project's free cash flow profile demonstrates exceptional values across a range of gold prices. Using our base 1,600 gold price assumption, the project has an NPV of greater than $1.3 billion, assuming a 5% discount rate, and it delivers an internal rate of return of more than 22%. We have good leverage to higher gold prices as well, where the NPV increases to about $1.9 billion at a gold price of $1,850. But most importantly, our project is resilient to lower gold prices given our solid position on the cost curve. Based on our current market cap, we're trading at nearly the widest discount to NAV despite achieving significant milestones. And I think this represents a very attractive entry price for new investors. Now I'll touch in a little more detail on our strategic and valuable byproduct, antimony. Antimony has been identified as one of the 50 critical minerals given the US has no primary production, and because China, Russia, and Tajikistan dominate the world supply with more than 90% of global production. The US, Canada, Europe, Australia have all included antimony on their critical minerals lists. Historically, antimony has been used for its properties in strengthening alloys and making them resistant to corrosion, as well as a flame retardant. Currently, antimony is being used in bearings for wind and hydro turbines, tinting for solar panels, and in semiconductors. It's also used in munitions for the military and in a low-cost liquid metal battery. The current administration in the US has made it clear that securing America's critical mineral supply chain is essential to our national and economic security. And Perpetua Resources and the Stibnite project are ready to be part of the solution. In fact, our project alone could supply about 35% of annual US demand for antimony over just the first 6 years of production. We plan to produce an antimony concentrate at scale, but we are also evaluating opportunities to produce military-grade antimony trisulfide. In September of 2022, we were awarded 2 grants from the US Defense Logistics Agency to study this potential. We are confident in our ability to meet the military specifications for antimony trisulfide because historically, our site supplied the War Department with 90% of antimony demand and helped define the current specifications for multiple munitions products. More recently, in December of 2022, we were awarded a separate critical minerals award through the Department of Defense under the Defense Production Act Title III program to advance construction readiness and permitting. The Title III program is intended to ensure that America has the resources, materials, and technologies needed for national security. In order to qualify for funding opportunities under DPA Title III, proposed projects must meet specific criteria, including the industrial resource, material, or critical technology must be essential to the national defense. Without presidential action, United States industry cannot reasonably be expected to provide the capability in a timely manner. And finally, actions pursuant to the DPA are the most cost-effective, expedient, and practical alternative method for meeting the need. Perpetua was awarded a technology investment agreement of up to $24.8 million under Title III after we submitted our proposal. The funding objective is to complete environmental and engineering studies necessary to obtain a final environmental impact statement, a final record of decision, and other ancillary permits in order to sustain the domestic production of antimony trisulfide capability for defense energetic materials. I think it's important to mention that the DPA funding does not interrupt the ongoing National Environmental Policy Act review process. And this award is separate from the Small Business Innovation Research Phase 1 funding that I mentioned earlier, awarded through the Defense Logistics Agency. Beyond these awards, we have applied for additional funding through the DPA Title III program, and we will provide updates in due course. Perpetua also continues to show the role that modern mining can play in solving the world's climate change challenges. In 2021, we signed an agreement to supply a portion of our antimony for Ambri's liquid metal battery. Our agreement establishes the foundation to help facilitate the decarbonization of energy grids. Ambri Inc., a private company based in Massachusetts, has developed an antimony-based, low-cost battery for the long-duration energy storage market. And our project will provide them antimony from the only responsible and domestically mined source of the critical mineral. Our minimum supply commitment can power over 13 gigawatt hours of energy storage. And just to put that into perspective, that is more than 8 times the total additions to the US energy storage market in 2020. And this amount of storage is enough to power about 1 million American homes with solar power or wind power for the 20-year lifespan of the batteries. This partnership directly links the restoration and responsible redevelopment of our project to achieving our nation's energy goals. Turning to the third pillar of our vision, Perpetua's restoration and mitigation plans provide early action for water quality and legacy feature cleanup, as well as concurrent restoration and reclamation for any new disturbance. These are pictures here on this slide of what the site looks like today. Our project will ultimately improve water quality, restore fish passage that has been blocked for decades, and clean up legacy tailings and waste sites. We are very proud to have broken ground this past summer on our pre-permitting early cleanup activities and water quality improvements at site under the ASAOC agreement with the EPA and Department of Agriculture. And we recently completed initial stream diversion activities for the 2022 season last fall. The ASAOC agreement was necessary to authorize Perpetua to voluntarily address environmental conditions without inheriting the liability of the conditions left behind by past operators after these actions are completed. The first 4-year phase of this project, which is expected to run through 2024, includes removing 325,000 tons of legacy waste and tailings away from the river and rerouting streams to keep clean water clean. Immediate time-critical needs are addressed over the first 4-year phase, and then the agreement allows for a more comprehensive cleanup activities if the project is approved, all of which will complement the restoration activities connected with our planned operations shown on this slide. I'm really excited to provide an update on the path forward for the Stibnite Gold Project. Today, we are one big step closer to achieving our vision following the release of the supplemental draft environmental impact statement for public comment and the successful conclusion of that public comment period in early January of this year. Importantly, our mine plan was identified as the preferred alternative in the draft document, providing further clarity for the remainder of the NEPA process. This is a major milestone for our project. Now that the public comment period is over, the U.S. Forest Service, as the lead agency, will review and respond to substantive comments it received and begin preparing the final EIS and record of decision. Based on the comprehensive scientific analysis conducted over the last 6 years and the expected path forward, we believe a final record of decision is achievable in late 2023 or early 2024. This timeline assumes approximately 6 to 8 months until a final EIS and draft record of decision is published, and then about another 6 months or so before a final record of decision. So the path forward from here is clear from a process standpoint, and we anticipate a permitting schedule update from the Forest Service after it's reviewed all the comments. So assuming a construction decision is made in the first half of 2024, our project is expected to be in production in 2027. A more sustainable future has been a cornerstone of our company and of our project since the beginning. And our proposed plan was built with responsible solutions in mind. We began environmental study and feedback gathering back in 2010, long before we submitted our original plan of restoration and operations to the U.S. Forest Service in 2016 to kick off the NEPA permitting process. The stakeholder feedback we received over the years has been really helpful in improving environmental outcomes for the project. Following the draft EIS comment period in 2020 and refinements to our plan, the Forest Service eliminated 2 other alternatives from further consideration and made the decision to go forward with a supplemental draft EIS to evaluate the remaining access route. So that's where we are today, and what the comment period that just closed was all about, was evaluating 2 different access routes into site. And we were really pleased again to see our project identified as the preferred alternative. So that proposed plan incorporating the burnt log route was identified as that preferred alternative because it incorporates water management and closure activities to reduce the duration of long-term water treatment requirements. It incorporates measures to manage stream temperatures and reduces the potential for impacts associated with access, transportation, and hazardous materials on the Johnson Creek and East Fork South Fork of the Salmon River. Under NEPA, and I think this is really important, under NEPA, a preferred alternative is identified by a federal agency to let the public know which action the agency is leaning towards selecting as final. So you can see that today we are closer than ever to achieving our vision based on this very positive development. So I've already covered a number of our recent achievements. I would also just like to highlight that we've been trading on the Nasdaq now for well over a year. Late in, or I guess it was the middle of 2021, and in August, we raised gross proceeds of $57.5 million in a public offering. And as of December 31st of last year of 2022, we had about $23 million in cash, and then the DPA agreement of up to $24.8 million. to continue advancing permitting and early restoration work while maintaining field operations. We also launched our sustainability roadmap and our 9th annual sustainability report in 2021. In late June, we received our first permit, the Clean Air Act permit to construct. And again, looking forward, we have some really exciting milestones, including the next major permitting catalysts. Despite all of our recent achievements, though, and the near-term catalysts that I mentioned, we continue to be significantly undervalued relative to our peer group, with pre-permitted projects trading at a multiple of 3 to 4 times where we are trading, and permitted projects trading at multiples of 4 to 6 times. We expect a significant re-rating to occur as we advance through the permitting process, but I also think there's an opportunity today with investors who recognize the strategic value of our asset for its antimony and who value companies with ESG principles that are foundational to their business plans. So summing it all up, Perpetua Resources is unique because we bring solutions. We have a large, low-cost, and high-grade open-pit gold mine. We will offer the only domestic mine source of the critical mineral antimony, and we'll use mine development to fund restoration at an abandoned mine site. Not only is our opportunity unique, but it's also the right time. Our company is trading at a significant discount to our project's value. And as we continue to hit our next permitting milestones, we expect our valuation to significantly improve, creating value for our shareholders. So thank you. And I think with that, we can open it up for questions.
Thank you so much, Chris, for the presentation. We're now going to continue to the Q&A session with Jessica and Chris. Your first question is, what are you hearing about a recession in the US, and how would that impact Perpetua if it does come about?
I think if we had each had a crystal ball, we'd probably be doing different things with our careers here. But I think I've heard different things in terms of a recession, but I know that there are those fears. I think a lot of it hinges on whether we had the so-called soft landing or more of a hard landing with the Fed policy and their actions. I think the good thing about our project is that, as we mentioned, we've got really competitive low costs. So our project is resilient across a range of gold price environments, macroeconomic situations. So I think we're insulated to an extent because of our low costs. And then I think in terms of when you think about building a project as we enter potentially a recessionary environment, could drive costs lower. So we could actually end up benefiting as it might be a really good time to build a project because there will be less competition for labor, consumables, and everything else that comes into it. So to sum it all up, despite what happens, we're prepared. And I think there are, actually benefits in that sort of environment.
Seems like Perpetua has the support of the community according to the support you received from the comment period. How strongly do you think that resonates in terms of the next steps?
Very strongly. It's something we're very proud of as a company, and that community support has been built for over a decade. And it's been the community support and constant engagement that has allowed the community to give feedback into our plan and improve it, as Chris highlighted, through the multiple steps in the 6+ year process thus far. And without that social license and community support, there is no mining company of the future. And so it's very much foundational to what we do and very much a huge part of our success as we look forward.
Will the DPA award have a significant practical impact on the time it takes to get production, or is it mainly a financial benefit, or is it just a feather in your cap without a meaningful impact?
It's absolutely a meaningful impact from more than one perspective. So obviously the immediate need is the cash to get us through permitting and to start advancing construction readiness. So our feasibility study that came out in 2020 shows a 2.5 to 3 year construction timeline. And with this funding, we're actually able to bring forward some of the pre-construction planning work, the scheduling, the detailed and basic engineering design for year 1 of construction activities, which means we are getting prepared to construct faster than we actually would have already, and starting to chip away at that upfront CapEx number. So it is material in terms of us being prepared to get to construction, which is needed to construct in 2.5 years. So it has a meaningful impact on schedule, and it also is meaningful in terms of us being able to tap into that funding during a time when it's a pretty weak market for gold juniors, and not have to dilute our shareholders. So it was very meaningful from a number of fronts. Also, I think, we've been banging the drums on how important antimony is and how it's controlled by China, Russia, and Tajikistan, and how it's a really important mineral in a whole lot of, or metalloid, and a whole lot of different applications, and it's validation that it is important, that we are the best solution for the military here in the US.
Would you find an offtake partner for the antimony?
I think we have one in terms of potentially the Department of Defense. As I mentioned, we've got there's certain milestones with the funding that we've been granted, and there's still some study work to do on that phase 1 for the SBIR program that I mentioned. But I think it can safely be assumed that if we can meet that criteria, and if we get the project up and running and we get permitted, DoD will be an important beneficiary of that. They only need a small amount of that antimony trisulfide. So the other big piece that I mentioned was our partnership with Ambri, and our ability to supply them with a certain amount of antimony metal. So how that's structured, I think there's different ways, and Jess can talk to different mechanisms, but that's not clearly defined yet, intentionally, because I think we wanted to leave some flexibility for ourselves. But I'll let Jess cover that.
Yeah, so if the question's around a traditional offtake agreement where there's financing up front for that antimony production, we have not signed an offtake agreement. But as Chris said, we do have one partnership with Ambri, so there is a formal partnership agreement in place for them to buy a percent of our production. Right now, it's linked to a spot price of antimony in the future, and negotiated around that spot price. So it's pretty much just a purchase agreement. But we can, there's flexibility as we ramp up and see construction and ultimately production. We could look to increase the amount to Ambri. As Chris said, the whole point of this Department of Defense funding is ultimately to get to them being a customer of ours. So there's a number of potential buyers of our antimony.
Will there be further changes to the proposed mine plan, or is it more or less finalized?
It's more or less finalized. It's been studied for 10 years now. And the proposed plan that we put forward and that the Forest Service selected as the preferred alternative aligns to our feasibility study. And so that is our plan when it comes to moving forward with construction. Now, could there be tweaks or small improvements potentially that come out of this final comment period as the Forest Service reviews the comments and puts out a final EIS? If there's any stipulations in there, of course, there could be minor tweaks, but big picture, we've got a final mine plan.
Do the relationships with the government put any restrictions on the assets possibly being sold, or are you effectively forced to carry on finding finance and developing the mine yourselves?
Yeah, so at this point, we're actually not a government contractor, again, since we're kind of unique in that we're still focused on permitting and just getting ready for construction. So we don't have a formal contract with the government to buy our antimony. This is them really through Title III helping a small business like ours in a time where capital is not readily available, maintain our momentum given antimony is such a critical mineral. So there aren't a lot of handcuffs there in terms of that agreement.
What are your financing plans in the coming quarters?
Yeah, so as we get clarity on a record of decision being possible in late 23 and early 24, as the Forest Service wraps their head around the comments and the next steps to prepare that final EIS, we will be looking to ramp up our project financing work streams again. And we've hired Endeavor Financial to help us on the debt side of the project financing, and given the strong economics of our project, especially in those early years with really low costs and high grade and high production, we've got a pretty killer payback of less than 2.5 years, depending on what spot prices you're using. And so we will be kicking off that work stream. We think when we look at the big picture CapEx, we think we can get about 60 to 70% of that through traditional project financing or debt. We can look at royalty or offtake agreements to help fill any gaps. As Chris mentioned, we have also and continue to pursue potential government funding opportunities, given we've got the strategic and critical mineral antimony. And then at that point, if there's any gaps or bridges needed, there's a number of other potential tools we can use so that, equity financing, assuming we've re-rated it, and it would actually be accretive to our shareholders at that point because we have permits in hand. There's ESG related financing, and given our restoration component of our project and things like building a fish tunnel, we think could be carved out and fit the needs of ESG financing tools.
How long will the Defense Production Funds take you?
The agreement is over 24 months. So through late 2024, there's a number of different items we can request reimbursement for, up to the 24.8 million. So it's essentially covers us over that 2-year time frame, basically all of 23 and all of 24 for certain expenses. When we look at our just bigger picture liquidity of our cash resources, plus the DPA funding, and our business plan, because there's things we're advancing that aren't covered by the DPA funding, like the early restoration at site. We've got sufficient runway and liquidity for quite some time.
Would the emphasis on extracting antimony affect gold retrieval percentage? What are the trade-offs between the two?
As it happens, our flow sheet is really designed to maximize the gold recovery. And as it happens, we would need to float off that the antimony anyway. So the fact that we can get paid for it and earn an additional return is actually really beneficial for us. But it would have been in our process plans anyway to float that off. Can
you comment on the attention precious metals are getting right now in the market?
Not enough, in my mind. I think it's a great opportunity. I think the macro economic backdrop is there. There's a lot of uncertainty on the geopolitical stage, and gold, I think, over time has really shown its ability to be a store of wealth and an attractive asset class in times of uncertainty. So we were talking earlier about where's the Fed going to land? Do we see a recession on the horizon? I think because of that uncertainty, there's never been a better time for gold and gold equities, right? With the exposure and the margins, especially like we have, it's a really good time for the space.
Which firms have analyst coverage on Perpetua, and what is their average analyst price target?
Yeah, so we're covered today by H.C. Wainwright, B. Riley, Cantor Fitzgerald, and then Roth initiated coverage late last year. And the average price targets across those four is about $10 per share, compared to where we're trading at today at about $3, I should add.
Is antimony typically found alone, or is there another metal?
Yeah, I am not a geologist, so I won't pretend to be, but I think it often is found with other minerals. It's often found with gold, but not necessarily in concentrations or the chemical makeup that is needed for certain applications. And so early on, that's why I mentioned part of the history of our site. Early on, they found out that whatever is the deal with the antimony at our site, it was perfect for what the War Department and needed at that time. So I think antimony in itself isn't that rare, but economic deposits like we have with the gold are rare, and of a certain quality is definitely rare.
As critical minerals are a sensitive topic, would you be open to investments by foreign nations?
Foreign nations, probably not. Foreign companies, potentially. No, honestly, I think it is a sensitive topic. There's clearly a need for antimony for the U.S., and so we wouldn't want to jeopardize the strategic path we're headed down here in the U.S. By opening doors to, buyers or financings that don't make sense and don't support that and aren't aligned with those goals. But if the question's a Canadian mining company, there's opportunity in the future for partnerships. So I think it truly matters exactly what country, company, etc.
With the demand for military-grade metals being so high and the rarity of antimony, are there any readily available metals that can serve as a substitute?
Not that I'm aware of.
No, not that I'm aware of either. And I think there's a reason it's on our critical mineral list, Japan, Europe's, Australia's, Canada's. There's a reason, and even within a critical minerals list of 50 in the US, there is prioritization if you're looking at it through a clean energy and national security perspective, in terms of what percentage is supplied from where and what's not currently available from where. So antimony is high on that list for a lot of countries. And there's been no substitution to date.
Are insiders buying?
Yes, we are obviously in the middle of year-end close and reporting. So there's the typical blackouts around that until we get our 10K out. But yes, if you look at last year, myself, Chris, Laurel, our lead independent director, we've all been buying. It's still a great value. As Chris showed in the valuation slide, we should be at a minimum 4 times where we are today, on the backdrop of where we are in permitting the Department of Defense funding. So no major dilution in the near term, and in a really good position. So good value still.
Thank you so much, Jessica and Chris, for your responses. And that ends our Q&A session. That concludes our presentation for today. But before we go, I will turn it back to Jessica and Chris for final remarks.
For more information, you can always visit our website, perpetuaresources.com, and my contact info is listed on our website as well. Feel free to reach out for any questions. Thank you.
Once again, this was Perpetua Resources Corp, trading on the Toronto Stock Exchange and the Nasdaq under the ticker symbol PPTA. Thank you to everyone in Toronto and surrounding areas for joining. Stay tuned for other presentations in your area, and see you next time.